Are you looking to buy a home? Do you have the down payment set up and keep hearing about this closing cost and just not sure what it is or what it cost? Well, stay tuned. I will break that down for you here real shortly. Hey guys, welcome back. This is Craig with Next Level Realty. So you're in the market to buy a home, you've got the down payment saved up, but you keep hearing about closing costs and you're just not exactly sure what that is. Well, closing costs is actually the cost associated with buying a home. It consists of your escrow fee, your title fee, your lender fee. If you're going to be paying your taxes and insurance through your monthly mortgage payment, that's included as well. Now, there are other fees associated with closing costs, but and obviously some transactional specific costs, but what I just said was about 90%, maybe even 95% of what the total closing costs will be. So now that we know what it is, how much are they and who pays for it? So closing cost is actually not a fixed cost, it's a variable, and it's based off your loan amount and your purchase price. The higher loan amount and purchase price you have, the higher cost you're going to have, and vice versa. To give you an idea, if you were an FHA buyer putting 3.5% down and buying a property at $350,000, you can anticipate those costs to be about 2.5% to 3% and or about $8,000 to $10,000. Now, obviously every situation is different, but that's a pretty good gauge. Using that same example of the $350,000 house, if you were getting conventional financing, you would anticipate your cost to be about 2 to 2.5%. Now, how are these paid? There's really three ways you can pay them, and you can use a combination of the three. So it doesn't have to be one or the other. It can be a combination of two or three. And that's, you can pay them yourself. You can pay them, through escrow at closing. You can have your bank or lender give you some type of a credit at closing, or you can have the seller give you some type of credit at closing. Now, there's consequences for all three of these. One, if you pay for them, obviously you're going to have increased costs during the transaction. Number two, if you have your lender give you a credit, they're most likely going to sell you a higher interest rate in order to do so. And then lastly, if the seller is paying for them, your offer is just going to be way less desirable than the competition. So that's basically it in a nutshell. I hope that helps somewhat. If you have any questions about this video or real estate in general, please feel free to reach out to me, and we'll talk to you soon.